The JSE's All Share index is firmer after a 1.2% decline yesterday as investors are focused on the upcoming US jobs report due later in the day for clues on the strength of the world's largest economy. At the same time, traders continue to monitor the earnings season while also keeping an eye on a turmoil among American regional banks. Karl Gevers, an independent market analyst, joins us now for the latest. Karl, give us a quick overview of how the markets are faring so far today.
Yeah, good afternoon, Ntokozo. So in South Africa, our JSE's actually had a nice positive day so far. So JSE All Share up about 0.8%. So recouping some of the losses of yesterday. And in fact, the share action amongst the winners and losers is a bit of a reverse of yesterday, with the gold shares down today after a very strong day yesterday, and likewise the gold price coming back slightly, and the rest making a bit of a recovery. Europe also looking pretty strong. Asia, apart from Shanghai, was also positive, and US futures looking better. Obviously yesterday was quite a volatile day after the Fed and the ECB hiked rates by 0.25%. But today, I think the market's just, recovering a little bit after yesterday's losses.
Right. Now, some interesting developments happening at MTN Rwanda. It says its profits fell almost a third in its first quarter. The company was hit by high interest rates and losing market share, even though it grew subscribers by 7%. Help us make sense of this performance.
Yeah, I mean, interesting that they still lost market share despite growing subscribers. So they're quite a big player in Rwanda, so market share of 64%. So obviously incumbents or the competitors making a bit of inroads there in terms of number of subscribers. So despite, actually the bottom line being under pressure, so profits down 31%, despite revenue growing, data, for example, up more than 20%, and fintech revenue up more than 30%. I think it just highlights the difficulty in, operating in some African countries where you have a lot of volatility. In this case, you've got the high interest rates that are causing finance charges quite significantly up. You've got inflation in Rwanda that in March was at 19%. So a lot of the macro components that you can't control, that are out of your hands, are really impacting on profitability in this case. So despite operationally actually having had a decent quarter.
All right. Well, back home, the Public Investment Corporation has increased its holding in Gold Fields by 14 billion rand in a move that is likely to signal a vote of confidence in the gold producer. But I wonder if that provides a green light for investors as well.
Yeah, I mean, certainly it shows confidence in Gold Fields. So I think from a PIC point of view, they obviously had a big stake already at 10%, so they increased that to 15%. I think the asset allocation within the PIC, they're also looking at getting more exposure to the gold sector. In terms of listed gold companies, where you get exposure to leveraged exposure to the gold price, and also the rand hedge component. So I think that would have informed their decision. Plus, of course, confidence in Gold Fields, that after the failed Yamada deal, I think has focused on smaller projects, incremental acquisitions and joint ventures, as opposed to a big acquisition. And that's always the risk of, especially in the mining sector, when times are good, companies go out and buy at high prices, competitors. But I think the strategy of Gold Fields is one that is quite positive. Incremental organic growth, small acquisitions, and then focusing on operating profitably.
Well, countries and companies alike continue to feel the reverberations of the war in Ukraine. Ratings agency Moody's has warned that Barloworld's exposure to Russia and the group's operational concentration in South Africa are essentially risks to its ratings. Should we expect some kind of downgrade there, or can Barloworld turn things around, do you think?
Yeah, I think the commentary, so they basically kept the rating unchanged at BA2, with a stable outlook. So I think in terms of the outlook, I think there's probably no short-term risk of a change there, because despite the Russian operations being disrupted by that war, because the Russian component is at least from management point of view, is self-sufficient in terms of funding. But I think that, they did highlight the exposure to the South African macro environment, where there's obviously highlighted and heightened socioeconomic risk, political risk, and regulatory risks, and Barloworld operating predominantly in South or Southern Africa with 72% of their revenue here. But I think overall, I don't think yet too much concern there on a potential downgrade.
Right, but certainly a story to continue to watch. Now, Alexander Forbes is making moves. They've posted a voluntary announcement regarding the acquisition of a majority stake in TSA administration. What do we know about that transaction?
Yeah, so TSA, also, I didn't know about it prior to this. So Alexander Forbes taking a 60% stake with an option to acquire the remaining 40%. TSA being an insurance administrator, so something that Alexander Forbes is very familiar with. And the intention there is to keep it operating as an independent entity and offering clients basically a better offering within the Alexander Forbes stable. So this now forming part of their overall product offering. It's got a 25-year history of operating in South Africa, and I think it in terms of it's obviously got a good track record, 120,000 insured members, but I see the share price was down about 5% today, so the market maybe not quite liking it, but I think it's not a huge part of Alexander Forbes' life in terms of value.
All right, well, Karl, thank you so much. We'll leave it there for now. That's Karl Gevers, independent market analyst, giving us a quick overview of the market so far.